April 2026 is not a month you want to sit out. We're entering a critical reevaluation phase across every major asset class, from gold hitting milestones nobody thought possible, to an oil price that's essentially a tax on the global economy. In the next few minutes, we break down exactly what to watch, when to watch it, and what it means for your positions. Let's start with the big picture. The Federal Reserve is in a tough spot right now. They've been hinting at rate cuts for months, but the surge in energy prices following the Middle East conflict has completely changed the calculus. The CPI print on April 10th is the first major market-moving event of the month. If inflation is still running above 4%, forget about a summer rate cut. That means fresh strength for the US dollar, and pressure across commodities and equities. Then on April 28th and 29th, all eyes go to the FOMC. Whatever tone Powell strikes at that press conference will set the direction for May and beyond. Now to the headline story of 2026, gold. After breaking through the psychological $5,000 level back in January, the metal has entered a phase of intense volatility, but the structural story hasn't changed. In fact, it's gotten stronger. UBS and JP Morgan have both upgraded their mid-year targets to between $6,100 and $6,300. But here's the bigger picture. This is no longer just a fear trade. Gold has officially overtaken the euro as the world's second-largest reserve asset. Central banks are not selling. They are still buying. For April, the key level to watch on any pullback is $4,400. A bounce from that zone is your confirmation that the structural bid is still intact. Moving to equities, Q1 earnings season kicks off in mid-April, and the market is watching closely for signs of execution, not just growth stories. Delta Air Lines on April 8th gives us an early read on consumer spending under pressure from high fuel costs. BlackRock on April 10th, same day as CPI, gives us a sense of how institutional capital is being allocated right now. And keep a close eye on United Health on April 21st. Healthcare costs are under the microscope in this inflationary environment. The broader theme here is a clear rotation away from speculative AI growth plays toward companies with strong cash flows and reliable dividends. In Europe, April is also a major dividend month. LVMH, Nestlé, and HSBC are all paying out, which could bring value-focused investors back to EU markets. In crypto, April could be a turning point, but it requires patience. Bitcoin has been oscillating between $70,000 and $80,000, and what analysts are watching for is the exhaustion of the sell-off that started after the October record highs. That 6-month profit-taking cycle is coming to an end, and institutional whales are expected to begin reaccumulating. For Ethereum, the story is even more interesting. On-chain data shows ETH is currently trading near its cost basis. Historically, that's one of the most reliable bottom signals in crypto. The recovery zone to watch is between $2,200 and $2,400. Ethereum has been lagging Bitcoin all year, but that divergence tends to close fast when the macro mood shifts. And finally, the X factor that controls everything else right now. Oil. WTI hovering near $100 per barrel is not just a number, it is effectively a tax on global growth. Every central bank, every equity market, every risk asset is being shaped by what happens in the Middle East. There are two scenarios you need to have mapped out going into April. Scenario 1, de-escalation around the Strait of Hormuz. That triggers a massive relief rally in equities, a sharp pullback in the US dollar, and breathing room for crypto. Scenario 2, a new disruption. That sends gold to fresh local highs, the DXY extends its rally, and sentiment for altcoins and small caps collapses. Know which scenario you're positioned for, because April could deliver either one very quickly. So that's your April 2026 playbook. 4 asset classes, 4 clear narratives, and 4 dates you cannot afford to miss. Save this video, share it with someone who needs to hear it, and drop in the comments, which asset are you watching most closely this month? We see you in the next one.